78% discount, buyers are going to step in and they're going to do what they do best. What happened here? We had a break of structure. Boom. Took it down to discount. Boom. And then what happened after that? They took it straight up. All right, peace and blessings, everybody. Peace and blessings. Love to see you on this Wednesday, South Factory, baby. All right, we're going to kick it off with the hottest topic on the street right now. We got Nvidia. Earnings was today. Everybody know they did well. The big shocker of the day is they hit $1,000 because they're going to do a 10-to-1 stock split and introducing the dividend. So we're going to slide right over here to Yahoo Finance. I already scrolled down to the article so we can waste no time. Here y'all go. Looking at the good information. Now, they didn't say how much the dividend will be, but, typically they got to go off the yield percent. And if they do a 2% yield off a dollar earned, you already know what time that is. So they're expecting for price to go back down into the 980s, right? But I'm seeing it's already at 1,000 post market. Hopefully, traders will take their profits pre-market tomorrow and allow it to come back down into a reasonable range. But next month, June 7th, according to Yahoo Finance and the statement they put out, they will do the split. Then June 28th, you will have the dividend. Okay, so you need to be in the stock by June 11 to be counted as a shareholder so you can get paid out on the 28th. So you got to be the X date. So 7 split, that means this thing going to go bananas. Me personally, you use your risk management however you want to do it because it's not a financial advice. I'm not a financial advisor. I'm just a brother with a laptop and some game trying to give you a little bit of sauce. Okay, so yeah, I'm gonna do what it do. I'm put on some little small position. Gonna give me some shares at that low rate because if it splits right now at $1,000, right? Yeah, I remember the dates. Yeah, I marked that down on your calendar. So if it split right now at $1,000, right? That's what it's doing post market. That means each share should be about $100 a share. It's $1,000 stock, $100 a share. You're gonna be doing very well. Some of the great members, shout out to Shantae for holding the bag since way back yonder down here. Actually way back over here. She been holding, right? Yeah, you up mad crazy, right? Then you're gonna get every share you currently hold gonna flip. Yes, they watering it down per se, but with the track record of Nvidia, it will return back to a very good high. Remember, they just split right after COVID during the COVID time frame. So you will get a very nice return on your investment, just like uh Amazon did, Apple did. Come on, speaking of Apple, Apple's currently at 190, right? When they did they stock split, there was currently $600 a share. When they split, they went down to 123 a share. So you picked up that. Now they at 190. We'll slide over to Apple too while we speaking on them because I got some stuff I'm going to show y'all on this. They're currently at 190, right? Great. They got to a high of 199, $200. That's a lot of bang for your buck. And they did a 1-6. So every share you own, they turned to 6 at that moment. If I recant history correctly. So yeah, you can get a nice bang for your buck. So this is the reason why you also do long-term investment. But we are here today to talk about trading and technical analysis, because that's why y'all pull up to the Sauce Factory to get this sauce. Okay, we're going to be going over liquidity sweeps versus liquidity runs. I should have my camera on so y'all can see my hand gestures, but whatever. But yeah, liquidity sweeps versus liquidity runs. And then we got a prime example right here, right? The algo called it out. So you see this change of character right here. See this pivot point? Boom. Last time Apple took off from this point, all right, they dropped down. They took out this structure here. Bing. When they took that low, I know it ain't straight. There we go. After they swept that low, right? Because we already got it set here. What they do, they ran. So this is liquidity sweeps. Look at the lows, right? They swept the low, and what they like to do in these said situations is run highs. So when you looking at liquidity sweeps, you're gonna look for them to return back to the last previous high and take those out. Boom. Boom. So if you didn't have the algo, this is what it looked like. Cut that off real quick, right? So notice they're gonna be running to the highs. And where you gonna be finding discount at? You gotta look for the discount and premium zones, right? So when they get that pivot point, you see like, hey, they are running. What we're gonna do is we're gonna run a fib, right? And that's how we're gonna know the trend is over. Let's switch this up. I know this is a little harder to see. Let me go to my everyday fib. Bada boom, bada bing, right? So when you look at it, what price did? Came down, boom. Once they swept liquidity, what did they do? Go back up to the 100% mark, right? Now, if you really look at it, say you ran your field to this current low, right? Where it took liquidity, it swept the low, didn't go far, stop hunt, right? Because they knew people were short here, but you got to look at it too. You in a bull market. When in bull markets, you think you're going to continue going low. Well, I can see why you got some market structure here on a daily chart, right? But that's nothing but a pullback in overall bull trend, right? Because this is the real trend that you was looking at from here to here. So we actually run a fib from this point to this point here, which we can do. Okay, let me change the color up because I got multiple. Boop. This number at 38% pullback on a fib. Y'all see that? So it made a 38% retracement in a uptrend, right? Let me get my fancy arrow out. Bing, uptrend. So you see, this was a uptrend to begin with. So we in a bull market, correct? It broke the trend. Boom, start putting in market structure to the downside. That's when you start getting lower low, lower high, lower low, lower high, lower low. Boom. Now look what it did. It done some fugazi stuff, right? It took this high. It should not done that. So you'll think to yourself like, that's suspicious. Don't they seem suspicious? But they F around and do this. Now, this is what you get caught up in, right? Everybody say we're gonna get low. But the problem is we didn't go no low. When they go low, in the famous words of Councilmember Mays, I get nasty, right? You know, RIP Councilmember Mays. Uh, they went low, but they stopped all of a sudden. Why is that? Why they chose this point to say, hey, we're gonna break the low? Cool, you saying they broke the low, that's a new lower low. But they stopped, flipped the script, and went back the other way. Let's clear out this chart. Let's clear out this field anyway. So we kind of keep it clean here. I don't want everybody to get distracted. Now, what we're gonna do is we're gonna put a horizontal line here. You gotta ask why. So you want to drop a horizontal line right there at the pivot point, and then want to go to the left. And we're gonna investigate, right? If you watched other videos and y'all been here before, y'all know always look to the left. If the price pivot, always look to the left immediately, right? Don't sit there and let it marinate on you. They'll be like, I don't know why it did what it did. Look, we got all this price imbalance, right? So you had a nice imbalance of price right here. Buy zone. All this imbalance. Boom. A whole gap right down the daily. Right? What did they do? They took it all the way here. Rebalanced all this price, right? Let's scoot on out. Come on. Zone out for me. Boom. So after they rebalance all this gap price in that little gap, they hit it once. Reaction. So you didn't know why they reacted there. You say, they touched inside this gap, but they spent the block. Why? They had a job to do right up in here. Once again, let's get this out the way. Let's zoom in. Right? Ding. Look, they had a gap to take care of. What they do? Square it up with the gap, right? Bing. Bing. You see that? They had a whole gap here, right? You want to really go to the close, each close. This is what they wanted. All right. See, once they took care of that price imbalance, the inefficiency, they drove it back down. The finish balancing our price down here. I'm sure we dropped down to a lower time frame. We can see what was left. Matter of fact, why not? We got time. Let's drop down to the 1 hour, right? And let's go back to the root cause. See, you got to get to the root cause of the said problem. way low. Yeah, there we go. That's the only thing I like about stock charts. It ain't a whole bunch of jibber jabber in a way you can hurry and get back to where you was. Boom. All right. So you see where the gap really took place at? Right down here on a 1 hour chart. So it may seem like, hey, this is a large area that we are actually looking at, but in reality, it is not. It's tighter than you think it is, right? So that's why they drove it way down here, found support, right? Because you got rejection. So this was a high price action zone. So it was highly reactive because price was rejecting here very hard. Look at it. When they came up, they did this complete 180, right? You got this bearish engulfing candle came down. Boom. They flipped it over here. Tried to get up. Next day, pop and took off running. So you can see this is a hotbed for price action. Let's go back to the daily chart, right? That's what you got to pay attention to. Like, what is those key areas? So knowing that, now we can get rid of this, or you can leave it, But we're gonna get rid of that to say we didn't know all that information, right? Get rid of this, that, and the third. Okay. Boom. Knowing that, this is our structure now. This is market structure. So when they spent the block on Apple, look, break a structure. What did price do? It shot up. That's what price like to do. Anytime you get a breaker structure, you're gonna want to go back to a discount zone, right? So here's your pivot point from the last drop. Boom. We're gonna go to that low, which is here, right? This is our low market structure. Price bounce. Okay, great. Then what happened again? Price come down, break the low. What price do? Retrace back up to a discount. What is the discount? The 618. You know what I'm saying? You see where I'm coming from now? So once they do the discount, guess what? They're gonna pull back. Now, if you want to tighten your range up, you can always readjust the fibs and say, hey, this is my pivot point, is here, this swing high here, right? Right. And you gotta keep grabbing circles. Bang. Right there, my pivot point. Now I'm gonna say, where's my break low? Here. What price do? 88% retracement. Perfect for what? A reversal. You're already clearly in a downtrend, right? This when you get your trend lines out. Pull a trend line out. Boom. Draw that out real quick. You want 3 touches on the top, slide. Boop, boop, boop. Right? Tighten that up a little bit. Straighten that out. Boom, boom, boom. This is your trend. Bumping against it, right? Actually set up something, but we ain't gonna talk about that today. So once you seen this was a downtrend, price swept the low. What did they do? Instant reversal. Always look for this, right? We can look for the run, the liquidation, liquidity run. I like to say, hey, what's happening here? If it ain't really full on running and it's coming to a halt after it broke a low like that, let's get up and close and personal. So after they take a low, I want to see. They took another low, right? I want to see what they doing here, right? They took this low. Boom. It ain't doing nothing. Why is that, right? Why is it halting here? This is your daily chart. So that means there's a whole day of inconsistency, right? It's closed as a doji. Next day, they run up. Where? To your discount. That's why you use your fibs. Find your discount zone. You don't want to chase this unless you had an idea. Say, hey, we about to sweep the low. It's at the end of the day. Let's go down to a 1 hour chart. Put it on bar replay, right? Because we don't want none of the other stuff. We just want this right here. So they swept the low. We're gonna go down to the 1 hour real quick. Boom. Place of interest right here. Notice, after they sweep the low, what did they do? They found support. What is support? 3 touches, right? Boom, boom, boom. But multiple touches. They find a support going sideways. Okay, that whole Wednesday, they going sideways. See, where's this Tuesday? Wednesday open. That whole day, up and down, up and down, up and down. On what? Support. Right? That's why I say if price having a hard time going anywhere and rejecting, Have an idea like, we just broke a low, which is here. More, you had internal, external, breaks a structure, right? Now you bouncing at a new low. What is the problem? Right? Hmm, nice. Man, that's nice. 3K percent. Wow. That's what I'm talking about. So once it breaks and it keep bouncing, you can take the safe bet and say, son, I'm gonna go long, right? You can easily grab your long position, say, if I want to play it safe, I want to go to the highest point, which is this level right here, price. That's at the market open. Okay, stop loss is the low. Great. My entry's here. Stop there, right? And then what I'm gonna do? You already got your fib, so run it up. I like to target highs, right? I want to see if they can take out the 100% because then that's buy side liquidity sitting up there at the 100% mark, right? They didn't quite get there, but hogs get slaughtered, pigs get fat. Remember that. So you can be a pig, okay, cool, but you be a hog, you're gonna get slaughtered. So try to be the pig, don't be the hog. You're gonna do something about it, right? So that's a $9 move to the upside from the safety of the high of the day. This was your high of the day. This your low of the day. Your stop loss at the low of the day. Entry at the high of the day. Don't cheat yourself, right? Don't enter at the early. You can if you want to say, well, this is my low. I'm gonna go ahead and just wait because what's gonna happen is technically the breakout wasn't ready. You got into this. All it's gonna do is chop your contract up. And Apple a slow mover. So you don't buy enough time to sustain this move. Guess what? You will lose. So this is the reason why you must buy time on the contract and have a great entry. If you wait for the breakout of the trade, you can say, well, in the day come or the next day come, I'm gonna go ahead and just jump in once it takes the high, boom, and I can ride it on up. So if you was patient, you got all this up move, which is great for option contracts, right? Which is great. But if you was impatient and you got this, and then you seen this happen, and you still lost the trade because one, you didn't buy enough time, and you were sitting through consolidation. So if anything, only other recommendation which I like to do, I buy my contract at the last minute, last possible minute. So when 3 o'clock hit, I'm gonna buy a position, right? I'm gonna put on a position, say, hey, I'm gonna hold this overnight. And if it goes to the dirt, oh well, I got an easy stop first thing. So if it takes a low, I'm gonna exit first thing in the morning. And you can pretty much tell that by pre-market, right? So what we mean by pre-market, let's put on the standard hours. Let's hope this thing don't act funny. Be a live recording, right? Do. Let's swing it on back. That thing get. Uh-oh. You go back where you from. All right, cool. So this year post market, pre market. Once you start seeing that right before the market open, you already know you're smooth. You get what I'm saying? So you don't have to necessarily say, hey, I'm getting the moment to find support. Wait, let the stock play out. If it's consolidating after making major moves like that, let it consolidate. From there, once it get done consolidating, you can wait till the last exact minute. If it ain't get to the entry, leave it alone. Do not touch it unless it cracks the entry. And you want a nice close above the entry, realistically, because it can get there and reject. Get this clean as chart up again because things get messy. Right? Let's get this out the way. Good. So if it didn't really get there, right? Like here, it got there, played around. Here, wick, right? But y'all are well equipped for this type of activity because y'all know about the 3 candlestick order block continuation. So do this. So you already know doji, boom, followed by a candle taking out the high of the doji. That's a continuation pattern. You're safe. Take the play, right? If you got in the day before, make sure you buy 30 days. If you're especially going to hold overnight, you need 30 days worth of time so you can withstand any morning volatility. So you want 30 to 40 days, you smooth out there, right? Or buy close to the money so you're not that affected. This FY, easy advice, free. So buy close to the money or buy 30 days plus of time and you can sustain these boring moves. But if you're gonna buy weekly, do not buy the contract until the last possible minute, unless it's breaking out or it's the last minute of the day. You can wait the last 5 minutes, get your contract. The data is not gonna be ate up, especially on a Wednesday. Remember, they recalculate all the contracts, so you will get smoked out on recalculations by itself. So you can get it cheaper because some other poor individual bought it early in that day, overpaid. You're gonna come in and get it for the low after they cut that position. Talking about Apple ain't going nowhere, blah, 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 blah. Because you have fools thinking it's still gonna go down. So they got smoked. Okay. So let's put these regular hours back on. We done with Apple. I'm gonna go to some other stocks and we're gonna run on that too. Cause we're gonna go ahead, we smooth out here. This ain't our only one that I want to show y'all. So what up next? Tessie. That Tesla. Whoop. Okay. Get that out of there. Boom. All right. So SOS with Tesla. Another run, right? So looking at this market, what's my thing? Oh, wait, let me get back to my daily chart real fast. Boom, boom, boom. So you see, we had another break. And you say, wow, Tesla really ran up, right? But look to your left, right? We say, hey, they ran up. Why? Let's go to the left. I marked this earlier. What is this? It should break. It should break a structure, right? Boop, boop, boop. Bingo. S. They be all right. Should break a structure right there. Okay. What happened? Price did a break of structure. What did they do? After they found support, you seeing it in the candles. The candlesticks are getting weak already, right? Once the candlesticks start getting weak, they're letting you know, like, hey, they about to get up and get. Never think the stock gonna keep going to the dirt. It's an extreme discount for Tesla, right? I mean, an extreme discount. Who don't want Tesla this low? People believe in Elon and all the Elon foolishness. Okay, so you really run it back. Say, hey, what them fields gonna do? Gonna run up to the swing high after this pivot point. Let's go. Okay, that's a 78% discount. That is a discount zone for buyers. This is where buyers like to buy in at. 78% off from a high? Come on now. Come on now. Elon be doing what he do. Elon be Elon. You feel me? Mm-hmm. Yeah, yeah. So they're gonna buy it at the 78% discount, not continue selling down. They ain't a terrible company. Very good, solid company, right? To be judged on the vehicles, but very, very solid company. So when a solid company like this, that's in the top 10 holding of the SPY and the QQQ, fall down, which is the NASDAQ and the S&P 500, when they come down to a 78% discount, buyers are going to step in and they're going to do what they do best. What happened here? We had a break of structure. Boom. Took it down to discount. Boom. And then what happened after that? They took it straight up back to this 50%, right? So at this moment, now we see we had a 78% discount. Hold on. I want to keep that reference point there. No. Let me get rid of these said fibs. Because they're gonna be in the way. I'm too nice. There we go. Boom. 78% discount zone. Now I want to run a set of fibs from this swing high here, or we actually go back all the way up to this high, right? So you can run it from multiple points. You can run from that high, or you can come down to this high. It's totally up to you, right? Right now we had a 23% discount. You want to run from this high, you go to 38. Then you actually change each pivot point. It changed the calculations, right? But if we want to go to the last swing high, which is here, right? We can argue, hey, Tesla currently back at a 60% retracement, 61% retracement, right? Actually got to a high of 88%. Once they discount it, right? Now you're in a premium zone to do what? Sell it down. So of course they're gonna take profit and start selling it back down because you had a premium zone, which is the 88% retracement of this said trend, right? So bing, bing, and then they pushed it back down, right? So from here they picking it back up, but needless to say, will they flip it again? You don't know. Will they hold market structure here because technically this is a higher low if they choose to continue up, or will they reverse somewhere up in here and simply say, we are done, let's go back down? So these are things you got to think about when you're trading in the markets. Back out to a higher time frame, look to the left, see what lows are on the table to be taken out, and then from there you target those said lows. Every pivot point is a key. The same thing in reverse for short sales, right? So let's see if we can clean this chart up. Let's look. We see price running up, right? We're gonna say, okay, cool. This is our highs here. Boom. Let's turn these, make it a nice visible color. You can see. Okay. These your breaker structures, change your characters, right? But look, this is where liquidity's sitting at. So when they took these highs, you'll say, oh man, that's new highs. We good, we good. Right. But then they tanked the market. Why is that? They got their target. What happened? It traded into this imbalanced candle right here, right? They say, hey, we just come back for this candle. Chill out, chill out. You know, it ain't that serious. We just coming back for this candle. We need to rebalance this. But short sellers had stop losses at these points. You got people who will short stocks. That's why GameStop in the trouble they in, because they don't know how to take profit. They keep getting these, they keep trying to short these stocks and not learning how to take profit. So guess what? You're gonna be in these troubles, right? So when these key situations go on, boom, they come back and rebalance this. They take out this short sellers. Okay, great. Induce other buyers to get into the game, and then they short the market to get you out the game. When you say, oh, it's going to continue up, they're going to take it down, discount it, then start playing games. You feel me, people? This is how the game go. So you want to pay attention to all those key details and say, all right, what is my target? When you step into this market and you say, hey, price is going up, what's the last pivot high? Mark them out. And those are your targets for the day. Like, hey, all right, cool. You got to this high. What you gonna do? You pulling back? You rejecting? Oh no. Okay, cool. You're gonna go to the next high, right? So I want to just mark them out. Boom, boom, boom. TP 1, 2, 3. All right, you got one? Great. You got two? Great. Did you get the three? No, you rejecting? What's the hold up here, right? So I'm say looking at it like this too. You got this cluster of price action right here at this high hanging out. Come on now. Pay attention to that. Why did they stop right here, right? And then they come out the gate coming crazy. It's a block. Pay attention. What price do? It got to the very bottom of this price action zone and say, my boy, we out. Rejection. Come on down. So you pay attention to this stuff. And you say, if you can't take the high, the moment you start getting weak, I'm not holding on to you. I'm out the door. So let's go down to the hour time frame, see how that played out. Because I'm telling y'all, especially my future traders, right? The market is slower than what you think it is. I know when you first start off with options, you think it's the fastest thing in the world, but it's actually slow and steady. You just be a little more patient. It will pay you by being patient. The moment price gapped up here, right? Boom, price shot up. What happened here? Price started doing a funny bunny dance. This is confirmation, right? This candle came in after the strong engulfing candle here, right? Candle came in and say, no, no, no. Trap, because you're going to say, this is support. I'm going to go ahead and go back long again, and I want the high. They say, no, no. We coming down some more. Right? So these the keys you pay attention to. If need be, you can say, well, if they're going to reject, I'm going to look at it like this. Stop loss at the high, entry at the body close, right? This is the opening of this head candle, right? Stop loss at the high of the candle. So I don't have far to go. The moment it cracks here, oh, I'm in a trade, and I'm looking for them to sweep the low, which is what? Structure. because that's where liquidity is gonna be sitting at. You would have had a very easy trade. You get out of Dodge. Could they get more? Yes, maybe no. You don't know, don't care. You want a nice clean trade, you go from where they came from. Look to target the last swing low or the last swing high. Get it how you live. But that's how you do it. Okay. I ain't gonna even hold y'all.